Hello friends, I once again welcome you, Dr. Nitin Jain, working in the Department of Commerce, SNJ Beach, KK Charts, SMJL Commerce and SPJ Science College Chandwad. We have already seen the topic of absorption of company. In previous two parts, we have seen the accounting entries in the books of vendor company, that is the company which is selling its business. Now today in part 3, we are seeing the entries in the books of purchasing company, or that is we call it as the transferee company. As the purchasing company purchases business from the vendor company, therefore these entries are very crucial to be recorded in the books of purchasing company. Let us go ahead, we will see what are the entries. Here you can see, guys, accounting entries in the books of transferee company or purchasing company, clearly given on the screen. The first transaction is what? For purchase consideration payable. Of course, as the purchasing company is purchasing business from the vendor company, it is necessary that the purchasing company should pay purchase consideration to the vendor company. That is why the temporary account is open, business purchase. In the given entry, you can see business purchase account is debited and the liquidator of transferee company, right? Credit is given to the transferee company, the liquidator who sells the business, the credit is given to that person, right? So entry is what? Business purchase account debit to liquidator of transferee company account credit. This is the entry for business purchase consideration payable. Now these from these entries you can see these both accounts will be closed in the subsequent entries. Second entry, first entry is for business consideration payable, then second entry is for asset and liabilities taken over. When purchasing company is purchasing business from the vendor company, it is but obvious that the purchasing company is accepting some assets and as well as the liabilities also. So whatever the assets are being purchased, all the ledger accounts are debited. That is why in the given entry you will find the first ledger, that is sundry asset account, is debited. If there is goodwill, when asset purchased are less and the purchase consideration paid is more, the difference is goodwill for the purchasing company, that is paid to the vendor company. That is why in the second entry goodwill account is debited. Assets comes in the business of purchasing company, sundry assets are debited, goodwill is paid, difference in the purchase consideration and asset purchased net worth, that is why goodwill account is debited. Then liabilities are also brought down in the books of purchasing company. Along with assets we have purchase liabilities. Therefore in the given entry you can see the sundry liabilities are also credited over there. Then as I told you in the last entry, business purchase account is the temporary account we have opened in the first entry. With the amount given in the first entry, the same amount will be credited over here, then the business purchase account will be cancelled. The business purchase account debited in the first entry, in the second entry we have credited the business purchase account with the same amount. And then the third account is capital reserve. In given entry, when in case of particular company, in the case of absorption of particular company, you will find only the goodwill or a capital reserve, not both at a time. If the purchase consideration paid is less than the assets or net assets acquired is more, then the benefit of the purchasing company will be shown to capital reserve account. So difference will be credited to capital reserve account. Means what? In short, when purchasing company is having benefit in the purchase of business, that difference of benefit is shown to capital reserve account, and if the purchasing company has to pay more than the net asset acquired, the difference will be shown to the goodwill account. In practical life, when these entries are passed, in case of particular company, only either goodwill or capital reserve account will be seen in this entry. Now first entry was for business purchase, second entry for net asset and liabilities acquired or taken over that are brought into the business of purchasing company. Now third entry is for payment of purchase price. Of course, business consideration payable was due in the first entry. Now it's our duty to pay that purchase consideration. In the first entry, we have given credit to the liquidator of the transferor company. Now here we are giving debit because liquidator is the receiver of the purchase consideration, receiver of the purchase price. Therefore, liquidator of selling company or the liquidator of selling company account is debited, and what is credited? Whatever going from the purchasing company is credited. You can see in the entry, if we are giving certain portion of the purchase consideration in form of check or by check, then we will credit the bank account. Then we are issuing shares, the share capital account will be credited. If shares are issued with premium, then securities premium account will be credited. In the purchase consideration, if part payment is through check, part payment in form of share capital or shares along with premium, and if the debentures are also issued to the vendor company, the shareholders of the vendor company, then in this entry the debenture account will be also credited. Means what? The bank account will be credited, share capital account will be credited, securities premium account will be credited, and debentures account will be credited. This will be as per the case of the practical example. It is not necessary you will find all these ledgers credited in this entry. Whatever is given, whatever the liabilities are being created by the purchasing company while settling the purchase price, that will be credited. The liquidator, as he is receiver, he will be debited, his account will be debited, and the bank account will be credited, share capital account will be credited, premium account will be credited, as well as debentures will be credited. In some cases we will find the debentures is not there. In some cases we will find that shares are issued at par. No premium account will be credited also. It depends on the actual transaction. Now we will see the next entry. Entry number 4. For expenses of liquidation paid by transferee company. Obviously, we are transferee company, we are vendor purchasing company, we are purchasing business. Therefore, expenses whatever we have to pay for this liquidation process, it is a part of our goodwill. We have like paid for goodwill, therefore goodwill account will be debited and cash or bank account will be credited. In the books of purchasing company, this entry will be passed. Goodwill account will be debited. Not the liquidation expenses. That liquidation expenses will be charged to goodwill account, and that account will be debited, and bank account or cash account will be credited. That is a simple entry for liquidation expenses borne by the purchasing company. Then last entry is for formation expenses of transferee company. Of course, whenever you are paying any expenses for formation of company, these expenses are called as preliminary expenses. These expenses are deferred expenditure in natures, and they are to be debited in this entry. That is, preliminary expense account will be debited, and expenses paid through check, bank account will be credited. Means entry will be preliminary expenses account debit, bank account credit. So these are the 5 entries. Thanks friends. We will come again with the new topics. Till then, bye bye.